Hey everyone, welcome back to Corporate Decoder. Today we are diving into ClearPoint Neuro's latest 10K filing, their annual report. This one is going to be interesting because it's about brain surgery, but don't worry, we'll keep it simple. And hopefully less scary. So what is ClearPoint Neuro? They are a medical device company, pretty small, focused on tools and services that help neurosurgeons perform minimally invasive procedures in the brain. Think pinpoint accuracy and less damage. They've got two main areas, selling medical devices for surgeries and partnering with drug companies for brain-related drug delivery. This report basically gives investors a snapshot of how ClearPoint performed last year. It covers everything from sales numbers to potential risks, and even a look at their plans for the future. We're going to break down the important stuff, like how they make money, what challenges they face, and what their prospects are. Let's talk about their core business, the ClearPoint system. It's like a GPS for the brain. It helps surgeons precisely target areas for things like biopsies, electrode placements, and drug infusions. The system uses software and special instruments that can be used in an MRI machine. They also have other products, like the ClearPoint Prism Neuro Laser Therapy System, which uses lasers to treat brain tumors and drug-resistant epilepsy. Recently, they introduced something called the SmartFrame or stereotactic system. This is significant because it allows surgeons to perform the entire procedure in the operating room, whereas previously they had to partially do it in the MRI suite. So it's a potential game changer that could reach more surgeons. The second part of their business revolves around helping pharmaceutical companies deliver drugs directly to the brain. The blood-brain barrier makes this incredibly difficult, so ClearPoint's technology and services are in demand, and there are over 60 partners using their stuff. They offer consulting, preclinical studies, and other services to support drug development. Their SmartFlow cannula, a tiny tube, is a key tool here, and it's already been cleared by the FDA for certain uses. Speaking of the FDA, this company is heavily regulated. Getting approval for new products or new uses of existing products can be a long and expensive process. They have to demonstrate that their devices are safe and effective before they can be sold. The competition is tough out there. ClearPoint is up against big players like Medtronic, Abbott, and BrainLab. These companies have way more resources, established relationships, and broader product lines. To compete, ClearPoint needs to keep innovating and finding its niche. It's worth noting that a large portion of their revenue comes from a small number of hospital customers and pharmaceutical partners. One related party customer, PTC Therapeutics, accounts for a notable portion of their revenue. Losing one of these key customers or partners could significantly impact their business. They make most of their products in a single facility in Carlsbad, California. That's great for control, but any disruption there, like an earthquake or fire, could seriously impact their ability to deliver products. They rely on a few single-source suppliers too, so they are really susceptible if anything goes wrong. Now let's dive into the financials. This is where it gets interesting. ClearPoint Neuro is still losing money. They have been operating since 1998 and have a cumulative net loss of over $191 million. That's a lot of red ink. They may never achieve or sustain profitability. They burned through $9 million in cash last year alone. They depend on raising money through stock sales or taking on debt to keep the lights on. If they can't get funding when they need it, they might have to scale back their operations. They have about $20.1 million in cash and cash equivalents right now. They raised a good chunk of it through a stock offering, which is a major source of the capital. All that cash and those securities are subject to economic risk. Some of it sits at financial institutions that exceed the insurance coverage offered by the FDIC, meaning if any of those banks go bust, they may lose access to their assets. On the intellectual property front, ClearPoint relies heavily on patents and licenses from third parties. The company has a license with Philips for their brain model software, with payments based on system sales and usage. They also have a license agreement with UCB to work on drug delivery platforms. If they lose access to these technologies, they may incur costly disputes and potentially halt developments in a certain area. They're in a heavily regulated industry, so they need to make sure that their operations adhere with the FDA's requirements. If they mess this up, they may be subject to fines, facility shutdowns, and other penalties. And with a recent increase in legislation and other payment and policy changes, it may limit the acceptance and availability of their products, which would have an adverse effect on their financial results and business. There's always the risk of product recalls, which would also harm the company's reputation, operating results, and financial condition. If their products cause death, injury, or malfunction, the medical device reporting regulations can result in voluntary corrective actions or agency enforcement actions. They are subject to various laws protecting the confidentiality and security of personal information, and any failure to comply could result in penalties and reputational damage. ClearPoint Neuro's business, financial condition, and results of operations may be adversely affected by general economic and financial market conditions and current and future social and geopolitical instability. Finally, their bylaws include a clause that forces stockholders to bring disputes in Delaware courts, potentially limiting their options for legal recourse. And the market price of their stock could be volatile, and stockholders may not be able to resell shares at or above the purchase price. Now for my take on ClearPoint Neuro. They are an innovative company with a lot of potential. Their technology is promising, and their partnerships in the drug delivery space are exciting. They've made progress in new centers and regulatory wins like the SmartFlow device, which indicates growth and momentum in the business. However, their consistent losses, dependence on raising capital, and customer concentration are definitely concerning. Their success hinges on whether they can achieve profitability, manage their expenses, expand into the operating room market, and avoid some of the risks they mentioned. I think the management recognizes this fact and is making an effort towards financial disciplines such as paying off debt. The main risk I'd keep an eye on, their reliance on a few big customers. If those partnerships falter, it could hurt the company significantly. Ultimately, ClearPoint Neuro is an interesting company with potential, but it's not for risk-averse investors. Thanks for watching. If you found this helpful, please like, subscribe, and comment.